Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest tonnage updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, there are moments in history where nothing looks different on the surface, but everything underneath has already changed. In 1450, when Gutenberg printed his first Bible, no one thought it would dismantle kingdoms. In 1866, when the first transatlantic telegraph cable connected continents, most people didn't realize the world had just shrunk. In 1993, when the internet went public, it was dismissed as a toy. And today, we're watching another one of those moments. Because what just came out regarding crypto legislation, stablecoin institutional adoption, and specifically the positioning around XRP isn't just noise. It's infrastructure being negotiated. And when infrastructure shifts, empire shifts. What you'll learn in this video today, by the end of it, you're going to understand what's really happening behind the scenes with the U.S. crypto market structures legislation, why stablecoin rewards are the quiet battlefield between banks and blockchain, how treasury-backed stablecoins could strengthen, not weaken the U.S. dollar, why major institutions like BlackRock and Goldman Sachs are now positioning, what's the quantum computing conversation actually means for XRP and Bitcoin, how instant payments and streaming payroll could redefine how Americans get paid, and most importantly, why XRP made sick directly in the middle of this infrastructure financial shift. This isn't just a news recap, ladies and gentlemen. Also, if you make it to the end, one of my legendary rants that everybody has come to love, this is macro positioning. This is infrastructure. This is understanding the chessboard before the pieces move. As always, thank you to everyone who likes this video and subscribes to the channel and comments. These three things really does help the channel out very much, and I love answering everyone's comments when I get time to do it. With that being said, let's break this down, ladies and gentlemen. When headlines said that the market structure bill was blocked, most people assumed gridlock. But behind the scenes, negotiation. And negotiation is how real power works. Brian Armstrong, Senator Bernie Moreno clarified something critical. It wasn't killed. It was just adjusted. The sticking point, stablecoin rewards. Now that might sound technical, but historically, interest on money has shaped civilizations. In medieval Europe, the Catholic Church banned usury, charging interest, which reshaped banking development. In the early 1900s, U.S. savings rates determined whether families built wealth or stayed trapped. And for decades, Americans parked money in savings accounts, earning almost nothing. Now imagine a digital dollar that earns yield, backed by U.S. treasuries, directly in your wallet. That's not small. That's structural reallocation of power. Banks understand that. Let that sink in. That's why this negotiation matters, ladies and gentlemen. I want to talk about the competition moment. Let me paint a micro story for you. Picture a single mother in Ohio working hourly shifts. She finishes a job Friday at 6 p.m. Under the old system, she waits 2 weeks to get paid. Under blockchain infrastructure, she gets paid instantly. That changes groceries. That changes overall draft fees. That changes stress. In 1913, when the Federal Reserve was formed, the goal was to stabilize money flow. Now in 2026, we're talking about making money move at the speed of information. That's not an upgrade, that's a leap. And every time in history money has moved faster, trade expanded. The Silk Road, the Medici banking network, the telegraph, SWIFT, now blockchain. I want to talk about dollarization 2.0. Here's the part most people missed. Stablecoins backed by treasuries create global demand for U.S. debt. After World War II, the Bretton Woods Agreement made the dollar the world reserve currency. Oil was priced in dollars. Trade was settled in dollars. Debt was issued in dollars. That created American dominance. Now imagine dollar-backed stablecoins used globally for instant settlement. That's digital Bretton Woods. Countries like Japan and China have been reducing treasury purchases. But stablecoin issuers, they're buying short-term treasuries aggressively. This is the quiet financial chess move. This is why policymakers are suddenly aligned. It's not just crypto. It's monetary strategy, ladies and gentlemen. This is so important. You got to let this sink in, seriously. And XRP lives inside cross-border liquidity infrastructure. That's not coincidence. I want to talk about streaming money and the Roman roads. The Roman Empire didn't dominate because of swords. It dominated because of roads. Roads allowed legions, trade, information, and taxes to move efficiently. Financial infrastructure is the road system of modern civilization. Right now, all roads are slow. Bank wires cut off at 5 p.m. Mortgage approval takes months. Settlement lags 2 days. That's like Roman legions waiting weeks for messages. Blockchain collapses settlement time. When Eric Trump talks about instant mortgages and 24/7 transfers, he's describing new roads, and the civilization that builds the fastest roads wins. I want to talk about institutional alignment now. Now, here's where the shift becomes undeniable. BlackRock, Goldman Sachs, Fidelity, JP Morgan. They're not speculative startups. They're legacy institutions that survived wars, depressions, and technological revolutions. When Larry Fink calls Bitcoin digital gold, he's referencing thousands of years of human psychology. Gold protected wealth during empire collapsing. Bitcoin now serves that narrative in a digital age. And Goldman Sachs discussing tokenization, that's Wall Street saying, we will operate on whatever rails dominate. They don't fight gravity, they follow it. I want to talk about the telegraph parallel. In 1844, Samuel Morse sent the first telegraph message. What hath God wrought? Within decades, global communications transformed. Markets synthesized. Arbitrage collapsed. Information asymmetrically shrank. Blockchain is the financial telegraph. Settlement speed eliminates friction. And XRP was built for fast cross-border liquidity. So when institutions build tokenized assets, when stablecoins expand, when regulation clarifies, liquidity rails become critical. Let's talk about quantum fear and adaptation. Every technological revolution faces exponential fear. In the 1800s, people feared trains would suffocate passengers. In the 1990s, critics said that internet would collapse global society. Now the narrative is quantum computing will break blockchain. Armstrong addressed it clearly. It's solvable. Post-quantum cryptography. Upgrades are being developed. Technological evolves. That's not weakness, ladies and gentlemen. That's resilience. Bitcoin upgraded. Ethereum upgraded. XRP can upgrade. Civilizations that adapt survive. I want to talk about the generational shift. Let's talk demographics. Every generation shifts assets preference. Boomers trusted bonds. Gen X trusted equities. Millennials and Gen Z trust digital assets. When enough capital moves, institutions follow. In the early 2000s, banks resisted online banking. Now you can imagine life without it. Crypto is following that curve. Slow resistance, gradual integration, sudden normalization. We're in the integration phase. Now you're asking probably, why does this matter for XRP? Now bring it back home. If stablecoin legislation passes, if treasury-backed digital dollars expand, if tokenization scales, if institutions build on-chain rails, liquidity becomes oxygen. XRP's core value proposition has always been fast, low-cost cross-border settlement. When regulation moves uncertainty, markets reprice infrastructure assets. History shows this pattern clearly. When railroads were regulated and standardized in the 1800s, rail stocks exploded. When the internet was commercialized in the 1990s, infrastructure companies led the boom. Clarity is catalytic. Let's take a step back for a second and see how market psychology has shaped investor behavior long before crypto even existed. Ladies and gentlemen, because understanding history gives us the lens to see today's markets move more clearly. And I always say, you got to read between the lines and see what's quiet. Most important, I always go over that. You got to see what's being quietly discussed. I want to talk about gold futures and a case study for a second, ladies and gentlemen. I find history fascinating, and to me, history is the way leading the future. That's my take on it. Again, I don't have time to watch TV or stream movies. I'm watching history and researching. That's what I do. But then again, I'm married to this, to each their own. Most people didn't know this, but in 1974, a U.S. Treasury cable from London to the State Department documented something really fascinating about the gold market. The cable, titled London Wholesale Gold Dealers' Views on U.S. Gold Sale and Private U.S. Ownership. WikiLeaks ID 1974 LONDON 16154 underscore lowercase b dash shows that policymakers were closely monitoring the emerging gold futures market. According to the memo, dealers expected that a large futures market would generate high volatility. They predicted that this volatility would likely reduce initial demand for physical gold holdings among U.S. citizens and discourage long-term holding. In other words, policymakers understood that trading instruments and price swings could influence investors' behavior, a principle that still applies in today's financial markets. Think about it like this. Whenever new financial instruments emerge, human behavior adapts in predictable ways. In the 1600s, Dutch merchants introduced futures contracts on tulips, causing wild swings in speculation. Some people made fortune, others panicked. In the 1800s, the rise of U.S. railroads created financial instruments that shifted investor focus from physical land to paper-based equity. This 1974 cable shows that the same principle at work. Even decades ago, officials knew that a large futures market and the resulting volatility could influence demand for physical assets. So for modern investors, the takeaway is clear. Volatility isn't just a number on a chart, it shapes decisions, confidence, and perception. Studying documents like this gives us perspective on how markets behave, and it's a lesson that connects directly to today's digital assets like XRP and Bitcoin. So, that's something that I find fascinating. If you need to rewind that to write that down to go look it up yourself, I encourage that. But getting back to crypto and XRP, and just like gold futures shaped investor behavior decades ago, today we're seeing similar dynamics playing out in digital assets. Volatility, market structure, investor psychology continue to have huge impacts, and XRP sits right in the middle of these evolving financial systems. Understanding history helps us see the present with clarity and anticipate the future with strategy. So I want to talk about the empire question. This technology will advance. That's not up for debate, ladies and gentlemen. The question is, does it happen in the United States, or does it happen in the UAE, Singapore, or Europe dominated? Empires don't fall because they lack resources. They fall because they resist innovation. Roman Empire ignored internal infrastructure decay. Britain underestimated industrial rivals. America cannot afford to ignore blockchain infrastructure. That's why this legislation matters. That's why these negotiations matter. That's why this moment really matters, ladies and gentlemen. So we're standing at an inflection point, like the printing press, the telegraph, the Bretton Woods, like the internet. The pieces are aligning. Regulatory clarity is advancing. Stablecoin economics are being negotiated. Institutions are positioning. Treasury dynamics are evolving. Infrastructure is being built. And XRP sits at the intersection of liquidity and modernization. This isn't hype. It's macro transitioning. Ladies and gentlemen, if you made it this far, you're not chasing candles, I'd appreciate a like, and if you subscribe to the channel, and a comment of what you think. You're studying structure. So that's what I want to talk. But I want to thank everyone for the amazing well wishes in the comment sections. I've been under the weather. I'm getting back at that as well. I also want to welcome all the new members of our Patreon, all the new members of the membership channel. Welcome. I love chatting with everyone and learning about everyone as well. If you're looking to get an edge and learn the tips from the pits of what I learned on the floor of the Mercantile Exchange from generations of floor traders, do come and join us in our Patreon. That's where we put together all of the different things that I go off on a rant and connect and talk about. And that's really helping people. That's the difference in certain people's performance and where they're going and why. Like I said before, my favorite animal is the wolf. It's not the mightiest animal in the jungle, but you don't see the wolf doing tricks at the circus. Remember that, ladies and gentlemen. That's seriously important. Again, I was on the phone talking to a very, very powerful family office that I've worked for many, many years, right? And they're actually watching these videos now. They're all watching these videos, and they can't believe I'm actually on YouTube. They laugh. They asked me to explain what a financial mercenary is to them. And I said, to me, and this was what was passed on to me from people on the floor of the Mercantile Exchange, locals, or traders who were trading their own family money forever, people who started the first hedge funds, everything, even people who own sports teams. Very small world before the Mercantile Exchange. I said, financial mercenaries are men and women not made in comfort. They're forged in fire, pain, pressure, and purpose. You must make yourself so busy, so disciplined, so determined that you don't have time to know what's happening in other people's lives, make pointless comparisons or irrational opinions. You must stay focused and devoted to yourself with that Gucci clarity, Gucci conviction. Every true financial mercenary that taught me the craft on the floor from 15 years old on, and we pay a price for taking this as a life's calling and quest. And the price we pay for this is isolation, exile from family potentially, friends, years of being misunderstood, pain that would break the average man or woman, why there's so few of us. And it's a life sentence. So when the demons in your head keep arguing between progress, takes time, and we don't have time. This isn't working out. I shouldn't have blah, 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 blah. This is the price for admission we pay each day. So you got to turn your mind to steel, crush the voices and demons in your head that vex your mind. And I said, that's why you have hired me to work for your family for decades. That's why you send me all over the world when things aren't working right. That's why most of the time you don't like me, but you like my methods and tactics. So right now, there's a lot happening, and there's things I want to talk about, and we're going to connect all this. And again, if you're wondering why we're the Remora and how we tie all these delicious nuggets together, come and join us in the Patreon. Decide that you want a better tomorrow for yourself, and you want to understand this. Believe me, I'm going to go over a couple of subjects. I'm going to tie it all back in. Again, this is super important. A lot of people got cut up like sushi, And a lot of people are going to get cut up like sushi because of reckless positioning. None of this is financial advice. This is my own opinion. And anybody that retains myself or organization in any capacity, not financial advice. None of this is financial advice, my own opinion. Ladies and gentlemen, China has declared war on paper silver. The Shanghai Futures tightens rules as physical stockpiles collapse. The Shanghai Futures Exchange has ignited a global silver storm in a stunning announcement effective February 27th, 2026. The Shanghai Futures Exchange will impose brutal new limits on near-term silver future positioning, a measure designed to protect China's vanishing physical reserves and crush speculative distortions. It's the new silver firewall. So starting February 27th, all hedging positions in both the delivery month and the month prior will be forcibly reduced to zero. The new silver firewall, starting February 27th, all hedging positions in both the delivery month and the month prior will be forcibly reduced to zero, unless an entity has a pre-approved special hedging quota. Only bona fide industrial users, refiners, electronic producers, and solar manufacturers will be allowed to maintain positions through physical delivery. That's massive. Speculative traders must roll out early or liquidate. The message is unmistakable. China will no longer allow paper speculation to drain its remaining physical supply. Let this sink in. That's massive. Again, there's a commodity war going on. We talk about this, and you're seeing both sides make overtures and responses to what's happening. This is China's silver crisis and its response. China's registered silver inventories have cratered to below 350 tons, their lowest in more than a decade, and down nearly 88% from the 2021 peak. The market is screaming distress. The forward curve is locked in, deep backwardation, with near months contracting, commanding massive premiums. This is not normal. It's a crisis signal. A shortage so severe that China is prioritizing its domestic industries before the cupboard goes bare. Nation's energy, tech, and every ingot now matters to the nation's energy, tech, and defense objectives. So this is a shockwave to the West. The ripple effects will be immediate. Western exchanges like COMEX and LBMA, already scrapping bottom-tier inventories, now face the prospect of sharply lower inflows from China. The physical silver that once trickled from Shanghai vaults into global supply chains, staying at home. Speculative liquidity may remain in London and New York, but the real metal, the stuff that powers factories and fabs, it's moving east. As China exerts physical control, the Western paper markets will increasingly reveal their hollow core. Here's a new resource reality, ladies and gentlemen. China's crackdown, combined with tightened export licensing and new industrial mandates, marks the next phase in the global resource war that we've been talking about for months. This is not a short-term regulatory tweak. It's a strategic barricade, a declaration that China's silver belongs to China. The West is scrambling to respond through critical mineral stockpiles, but the lead is already slipping away. So what the bottom line is this, in English, taking the PhD out of PhD, this February 27th rule change is more than a bureaucratic adjustment. It's a strategic strike, dismantling speculative excess, defending dwindling reserves, and reshaping the global silver trade. The age of paper silver dominance is ending. Physical ownership now defines power. That's why before I was talking about that cable, which I found fascinating. Again, as a financial mercenary, ladies and gentlemen, we don't care what happens. We are going to take advantage as the remora feasting on the flesh and the blood and the water from people who broke every rule in finance. But again, none of this is financial, not financial advice, helping you get Gucci clarity. States has created a price floor framework for critical minerals aimed at cutting reliance on Chinese supply materials tied to national security. According to Undersecretary of State Economic Affairs Jacob Hellberg, the framework was developed through interagency coordination and is now being discussed with allied governments. The proposed price supports are designed to protect non-Chinese producers from oversupply-driven margin compression and may be implemented through any form of U.S.-led chain alliance. So if you look at strategic pricing as industrial policy, in English, the United States has begun advancing a coordinated price floor system for critical minerals. According to Bloomberg, marking a potential shift from passive market participation toward active price management and strategic commodity supply chains. Ladies and gentlemen, this initiative is being positioned to allies as part of a broader effort by the Trump administration and more than 50 partner countries to reduce reliance on China for materials deemed essential to national security. I want this to sink in for a second, again. And if you need help and you want to learn how we tie all this in and how we actually see where we're going and why, because this is already old, and these things we're talking about right now in this video, we've been discussing to people that retain our organization in any capacity for over a year of where we'd be going with this again. So if you're looking for an edge on how understanding obscure facts can help you get ahead with the markets, please do come and join us in the Patreon. You're doing yourself a big service. You're learning this because financial mercenaries only care about one thing, our bank accounts and getting ahead. We have no allegiance to anything, just the results. I want to drill this in right now. Okay, this is super important. Stay with me here. This is beyond important. Bitcoin represents a wager on the success of President Trump's economic reform agenda, while gold reflects investor skepticism about the United States' ability to resolve its debt burden without currency debasement, okay? Gold no longer functions primarily as an inflation hedge, but instead signals declining confidence in structural economic reform. It's the old guard's confession that they see only one way out of excessive leverage: print, debase, and hope the music doesn't stop. It's outright insanity. Remember, I always tell you that traders have mental illnesses. Rising demand for gold indicates investors' belief that federal debt load leaves policymakers relying on monetary expansion rather than productivity-driven growth. So, Bitcoin reflects confidence that reforms championed by President Donald Trump, Treasury Secretary Bassett, and Federal Reserve nominee Kevin Walsh could redirect capital from bank reserves and Treasury holdings into the productive economy, allowing growth to reduce debt ratios over time. So, in English, Bitcoin's a bet on President Trump's success. If reforms efforts fail, gold's preservation thesis would be reinforced, while Bitcoin's premium tied to policy change could really diminish. The positioning of both assets reflects broader investor divergence over fiscal sustainability, monetary strategy, and the credibility of U.S. policy reform efforts. Again, this is not financial advice. These are the themes shaping everything. When you track where money's flowing, you can see. Again, if you look at the crypto space, it's like the AI space. A lot of people in the institutional world believe there's a bubble going on right now, and money is going to flow to the path of least resistance. Again, it's not going to marry any kind of I'm right, you're wrong, I hate you, you're this, you're that. I don't like you, you don't like. Nobody cares. Nobody cares. It flows to the path of least resistance. Again, in our opinion, gold is probably the most crowded trade right now, and biggest risks are the AI bubble, probably is followed by inflation and disorderly bond yields. Again, this is not financial advice. This is our opinion, and anybody retains any capacity, we're discussing all this, okay? So gold is heavily owned, but it's not viewed as a primary systematic risk yet. So that's important. Now we're going to talk about Tether. You know I love Tether. We can't have a video without me talking about Tether, right? Tether is something you got to watch about. You got to watch them. Again, being the remora, you don't get cut up like sushi. You don't. Tether Operations Limited announced February 17th that Elemental Royalty Corporation, a NASDAQ-listed gold royalty company, will provide eligible investors the option to receive dividends in Tether Gold rather than cash, according to the company's statement. This represents the first time a public gold company has offered to shareholders the ability to receive dividends in tokenized gold, Tether said. You got to let that sink in, ladies and gentlemen. You know how massive that is? Come on, it's changing in front of you. You see this. Harry Houdini could make an elephant disappear in front of a stage from a diversion, a distraction. Moving on. Massive news. Societe Generale's digital asset arm, SG Forge, has deployed its Euro stablecoin, EUR coin vertible, on the XRP ledger, following previous launches on Ethereum and Solana. Let this sink in. It's massive. You got to marinate on all this. You got to let all this information marinate in your mind and write it down. It'll help you. Or come and join us in the Patreon. It'll help you even more. The move increases institutional access to the token, which is described as a MiCA-compliant and backed one-to-one by cash or securities. Again, that's massive. We went over this in the beginning of the video. U.S. Senator Bernie Moreno indicated the Clarity Act may pass Congress by April 2025. So, Coinbase CEO Brian Armstrong claimed the solution addressing stablecoin rewards and emerging, potentially allowing renewed support for the bill. If you're looking at Polymarket's predicted probability of passage surged to 90% before. So, I want to talk about, and I'm going to bring this all in. Stay with me. Again, or rewind it. Ladies and gentlemen, over the past 5 years, the Turkish lira has lost 84% of its value against the U.S. dollar. Nobody talks about that. Acute fiat currency debasement in countries like Turkey, which is the 16th largest global economy by GDP, has long been a bullish thesis for BTC and crypto adoption more broadly. This thesis has largely panned out thus far. So if you're going back and you're looking at chain analysis, 2025, the U.S. is the only developed nation among the top 10, and you look at their adoption index, right? The U.S. placed second with India ahead of it, and Pakistan, Vietnam, and Brazil placing third, fourth, and fifth. Turkey placed 14th in 2024, according to the data from Chain Analysis. Stablecoin trading volumes on centralized exchanges were equal to 4% of GDP in dollar equivalent terms in Turkey. That's massive. So when you look at the Forex and you look at the pairs trading, we're seeing patterns in volumes outpacing those of Bitcoin. So we're observing patterns for USDT TRY volumes outpacing those of BTC TRY, with other currencies emerging market fiat currencies. So for instance, in January, we were pointing out to people over the past year, USDT BRL saw an aggregated volume of USDT 13.66 billion. This is compared to USDT 4.79 billion in trading volume. That's massive. So the reason for this dynamic is likely the following. Locals are seeing the relative safety of the U.S. dollar, while Bitcoin's volatility makes the asset a difficult store of value in the near-term volatility. So what this means in English, for crypto proponents, digital assets represent a logical solution for emerging markets. Bitcoin advocates point to the asset as a hedge against currency debasement. So the self-custody nature and peer-to-peer transactability of digital assets allows users to avoid counterparty risk tied to local institutions or possibly undue censorship. So via crypto, users in emerging markets are able to access an array of financial services that may be lacking in their logistical local jurisdictions. These include crypto-native services, include borrowing, earning interest, and increasing investing in tokenized real-world assets such as gold. The takeaway in English, compared to emerging market fiat currencies, the U.S. dollar offers relative safety. So the cryptocurrency characteristics of stablecoins provide additional incentives for gaining U.S. dollar exposure via blockchain in emerging markets. That's why the east side of the tranche doesn't want them there. Again, that's why the BRICS people don't want them there. That's massive. So I'm trying to give you an overture of what's happening. What we just went through when we drilled down about all those topics and how XRP and Ripple is the future. And this is not financial advice. This is just my opinion and anybody that retains organizational capacity. We talk about Ripple's overall catalog of companies. I hammer in on this because we see them from a business side. We see their platforms. Retail people are not going to see these platforms. We see this on the institutional side. So to us, it's a no-brainer. But again, ladies and gentlemen, if you made it this far, I appreciate you. I'd appreciate a like, a comment, and if you subscribe, because here's one of my other famous quotable things. And eventually we're going to have T-shirts and all kinds of things for people. We've been getting bombarded with demands, and it's unbelievable, from our community, which is amazing. If you made it this far, I'll know because you'll be laughing at this. Do you think a honeybee, wastes its time discussing with a fly that honey tastes better than feces? Does a honeybee waste its time trying to explain to a fly that honey tastes better than feces? That's like trying to explain certain things to people who don't want to understand anything. That was drilled into my head on the floor of the Mercantile Exchange. Drilled into my head. Because nobody understands, but we understand. That's why we pack up. We understand what's happening. So why I'm going to say this? Ripple is building a catalog of companies for institutional demand. And in institutional demand and institutional operation every day, from the top to the bottom, it will trickle down. That's why utility matters. That's why licenses matter. That's why being tied and bred into the treasury tranche on the west side matters. So we just went over in this video a lot of history about people trying to do one thing or another, influence markets one way or another. I find it fascinating. So how will I put this in today's normal language? In today's language, you can't convince people why you're in XRP. You're wasting your time. You are going to, again, the bee don't waste its time. Don't waste your time. And the biggest thing I want to explain about this is you're in the right place at the right time. As far as we're concerned, this is not financial advice. So don't waste your time in trying to explain this, because when this finally gets and it trickles all the way down, they're going to sit there and say, wow, I should have probably gotten involved and listened to you. You can sit there and say, I did my karma. Welcome to the Karma Cafe, right? There's no menus. The dish you get served is what you deserve. So I'm going to get a good dish in the Karma Cafe. Again, ladies and gentlemen, the biggest thing that we're watching as well right now is the Middle East situation. We've been long oil since the first armada was dispatched. Now, we believe that this situation will potentially probably go kinetic, but right now, that is one thing that has the ability to change everything in the market right now. So while we look at one part of the soap opera of chaos that we watch that allows us to go downstream from the announcement of what's happening to the reaction to what's happening, to the positioning of what's happening, to the availability of what's happening, to fear of missing out of what's happening, is something that we explain to everybody that retains any capacity, and we're teaching everybody in our Patreon. Ask yourself this question. If something does happen, do you think that's going to affect prices? Of course it will. So at this point in juncture, you have to be very, very careful with anything you do right now. From a kinetic standpoint, that means military strike. The weekends are always the worst when situations are like this, again, because markets are closed and illiquid, but positioning is going on right now, people moving out of the way. The other big thing that we're discussing with people over the phones, and I can't get off the phones, is that, and our phone's blowing up, and it's amazing because you can't pump more metal out of the ground. So now you have the big miners and big companies calling the explorers, JVs, Wildcatters, everybody. Phone don't stop ringing of who we can hook up with who to buy concessions, to get ground in places, who's been there, who's not. This is what's going on right now. So when I go over all these things, and the video's gotten longer, because I'm trying to show you what's happening. I'm trying to show you the conflict in the commodities, the war, the fight that's happening financially, who's doing what. Now, I'm not talking conspiracy theories. I'm showing you and backing you up what we're doing for ourselves, not financial recommendation whatsoever, what we're doing for ourselves and other people that retain us any capacity, one portion for them, because we do a lot of other things for them, right? One portion of how we take these events, geoeconomic warfare, geoeconomic outcomes. Outcomes is the second part. You want to stay with us, you're going to see that in part 2 tomorrow. Outcomes. Ladies and gentlemen, the signs are there. It's like hunting. If you know how to track an animal, you know where it's going. These are things taught to you. So, with that being said, think about it. The very people who shaped the global financial system have had their eyes on XRP from the start. They debated it. They tried to control it. They tried to slow it down. And yet here we are. This isn't hype. This isn't theory. It's documented influence at the highest levels. Here's the craziest part. While retail investors panic at all the leverage is gone, metals are quietly stabilizing, and XRP is holding its structure. You're watching history unfold. You're seeing a rare moment where everything aligns quietly. The system, the assets, the players behind the scenes. If you're still here, still paying attention, still thinking instead of reacting, you're already ahead of most people. Years from now, this period won't be remembered for panic. It'll be remembered as preparation. Stay patient, stay grounded, and above all, pay attention to what's quiet. Markets don't do this by accident. That's not noise. That's structure. You're part of it. You're witnessing it. And you'll look back one day and you know you understood what most missed. Thank you for being here. I appreciate every one of you. Have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. This content is for informational and entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before. Remember, the game is changing. And those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, acting after the move, rationalizing why they missed it, telling themselves they'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally, because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes? Smash that like button. Ring that bell and leave a comment with your thoughts. Turn on notifications, and most important, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the public. Love you all.